Hello, and thank you for joining. My name is Kai Whitney, and I'm the owner of RedBridge Capital, and I wanted to thank you for considering RedBridge Capital for your mentoring and training needs. This is a short review of a student's trade, this video here, where you'll see the first and only auto order flow learning tool created specifically for the RedBridge Capital Private Mentoring Program. You'll notice little acronyms on the bottom and the top of each bar that label order flow patterns and spell them out so that students can continue to have my professional analysis of how I interpret order flow even after they've completed the program. In this review, specifically, I'm helping a student better their trade location and where to be able to load up on their contract size without taking on any additional risk. I hope you enjoy. Okay, so here we go. Let's take a look here. We're going to be looking at the first trade where we're anticipating a trap of sellers, which is our main bread and butter trade. And that's where you're looking to find heavy negative delta, which is found down here beneath negative 103. And what's happening now is sellers are potentially getting trapped. And so what we're looking for is once the price action actually overtakes the sellers, what you're looking to do then is you're looking for them to get out of their trades. A lot of times that happens at the market when you get a stop. So these are stop runs beneath and then stop runs above, and that's what fuels or adds fuel to this trade. Now we're sitting at the volume point of control, which would be your first target or your first risk level. That's where you want to make your adjustments in your stops, moving your finger over to the close button. But you're also looking to see who's going to win this battle between the sellers, the previous sellers, and the new buyers. So there's new buyers coming in. Those are showing in the blue balances. A little zoom in effect for you. So we're at 42.79, still sitting at the VPOC, which is basically a fair price. Now we're getting an uptick. Now we're seeing the sellers come in response. Those sellers are coming in from this 223, this 170, and this 118, overtaken by the buyers. Now buyers are in control. So now you want to look to add to your positions. Your original position again is right above this 323. And then we're adding to that position from here. And now what you're doing is you're anticipating a breakout. And you want to put your stop behind the buyer's level. This is the very last seller, this 170, that you'll need to confront and overtake. And you're going to want to watch these numbers here. We're looking at 42.83, 82, 82, 83. Playing back and forth. Notice it's back and forth, back and forth. That's basically an auction. One contract here versus about 100 there. So the buyers are still more active, although the price is down ticking. Okay. So we're looking for the retracement off of the seller. So the seller did have enough action to trade down. Now we're looking to see if this 179, this 190, this 192 is going to basically be absorbed by the buyer, and that will be your opportunity to buy. 303, still there, 307, 313, 354, 383. So obviously they're adding to the sellers. But now is when I'm saying to myself, okay, so we're at 498, 431 sellers. Why is price not moving down? We're only seeing a tick down, right? A tick down, tick back up with such an influence of sellers. So you always have to think about the other side of the trade. What are the other side of the trade? It's the buyers basically absorbing these sellers. They're not able to take the price down. So as soon as we now If price rejects going lower and trades up and around the 531, there you go. That's your long entry. And that is where you want to just go ahead and load up in anything you can. But notice if your first trade, your initial trade is here at 42.73, you're still in profit. Okay? So at not a single point are you negative. And that's the key when you are adding contracts. Never add to a negative position. Always add to a positive situation. Okay. We're getting the acronym SQD, sequential decline, a little bit of unfinished business right there, UNF. You also have a unfinished business up here. So it's going to take out one of these unfinished business levels. Price action is good now. It's developing. Buyers are stepping in. And good. There's the ad. Contract ad. Seller, 140. You're watching to see that's an auction there. 170 versus 240. Buyer went silent. 204 adding, but then price action is still lifting. So you want to watch those sellers. You may have to close this trade out right here, but now it just went away. Buyers got absorbed. Now this should launch. Now what you want to do with your stops, as I'm saying here, is you want to hide behind your blockers. Your blockers are the larger contract size, those that have more money. So we're going to hide behind the imbalances in blue and continue to try to ride this trade until sellers start to step in again. That's when you'll start to adjust your risk again. And you should be able to identify your potential risk by looking at the previous sellers, where they initiated sales. This is also very constructive here, the build of the buyers at and above the volume point of control. So that's going to tell you who's going to be in control for most of the day. And that's when we're going to be, if we're going to trade this and scalp this, we're going to wait for another pullback back into this volume point of control area, and we will be looking for longs again. Now when you get up to these higher levels, this is not because of the structure here. Obviously buyers are in control. You do not want to sit there and try to short it. Even if you're right on a short, you're only going to get a couple ticks. A little bit of sellers coming in. This is a spot where you want to just take a look at getting out of something here. We're coming up to a level 42.90 as marked off with the blue line. That should pretty much do it right there. Nice trade. But again, now we're going to be looking for a fresh new trade. That's when you're looking for the retracement to come in. Anticipating a continuation. This is a continuation long is the next trade. Very good. You're identifying basically where the buyers keep stepping in and showing control. And you're doing that by connecting the buyers, the buy imbalances. Okay, here we're looking for, once again, sellers are overtaken and they become support for long. So we're looking for the initial direction, as we're seeing here, the lift up. And we're now anticipating a breakout. Now this should run to the next value area, at least the initial balance high. First target out. Now we have a free trade. We're going to start moving our stop once we get a little bit of distance here and hiding behind the buyers, using them as blockers. $25 ticks on this last one, 30 ticks on this last contract, the 26 contract, 27 ticks. We just keep, looks like 30 something, 40. We're going to hide behind the stop. Behind the buyers. Now, obviously, there's a lot of air beneath, a lot of low volume between 44, 46, and all the way down where we launched from. So there is an opportunity to short. It's possible, but you want to keep your tight stops. You want to watch for this developing auction right here between 44.38 and 42. We're looking to set up a trap. There we go. We're anticipating a trap. There's the initial direction. We're going to wait for the retracement back up into resistance now. We're going to try to take a short. Now this is just one contract so far. You're always judging to see if you can add more. Okay, it's moving a little bit. Go for a break-even trade. Then now we're going to hide behind the stop or hide behind the sellers and take it out. That was a very quick trade, only 10 ticks or so. Not enough to add contracts to. Can try one more time as we come up and test the ledge there of that volume sticking out at 44.40, 44.41. But we also have to be aware that obviously there is a long bias. So again, these shorts are just tests. Now again, I know that these numbers are going a bit quick for most of you. There's obviously, we have actually proprietary trading drills to help you speed up the process that you're seeing these numbers, you're interpreting these numbers, and you're able to react to these numbers. Again, it's part of the process. It takes screen time, but when you have the right drills, the drills that were taken from my days as the institutional trader, this helps very much. So small stop, very, very tight stop here, looking for a breakdown. Bad trade. But when a bad trade only costs you 4 ticks, remember, each trade we're just testing to see if there's opportunities to get a free trade and a free look, and then an opportunity to add more to that trade. Now, because those two shorts were basically rejected, we're using the same level above the IB high, the initial balance high, as support. So now it's all about looking for longs. And because the buyers are involved, yes, you can anticipate breakouts in this. Buyers are in control. You can anticipate breakouts, but you can also still work with retracement longs and using, again, these buyers as they're developing. For considerations, please email us info@imftracker.com, institutionalmoneyflowtracker.com. Thank you for your time.